Okay, so this is the video for January the 7th 2015. So 5 minutes euro dollar as usual. I come in around around here hold on. Yeah, around 8. So basically what I see a downtrend for the overnight action, and then it's starting to stabilize here. Basically we have a double bottom here, still lower low, so still looking down, but still, like say, a double bottom here. It's slowing down. Basically we're starting to form some pretty good support here. So it breaks above it and I decide to go long in order to, basically betting against the downside breakout. So I go long here, 1811, and I take 8 pips on that one. I got a little bit nervous as I've been doing lately. It took a while, and I was just afraid that it would test the breakout and basically then keep going down. But anyways, I take 8 pips, better than nothing. But retrospect, I would have easily gotten the 10 ticks, but anyways, first trade, so the 8 ticks, not bad. Basically it does eventually come back down pretty strongly, and that's when I decide to go long again at that same, around that same level basically, and I go long here at 1808, take a little bit of heat. It's starting to look really red. Really, the price action is really down here, so I'm really getting nervous at that point, to be honest, and I get out with less than 10 ticks again, because I'm like, this is probably gonna result in another leg down. So I take even less. I think here I took 13, so 18 to 13. Yeah, I only took 5 pips on that one, because again I was really starting to get worried. There was like a big trend down and I just worried it was going to keep going. So plus I've been trading to the downside mostly, so I'm still a little bit nervous to the upside, because this thing, the euro, is really on a huge downtrend on a longer term chart, on a daily and weekly, and basically on every chart. It's just made new lows, like since, like, I think it's made like a 12-year low or something. Anyways, so then anyways it does go back up, so it's starting to look pretty strong to the upside. But this whole thing, I'm looking at this whole thing to me is orange there. Sorry. There, so I missed this. This is also news, so I guess it must have been news for, yeah, okay, FOMC meeting. So I missed it, but still, FOMC meeting, I'm usually very careful, because that's the type of move that can go one way and never look back, and basically for several reasons I don't short that. But then it starts creeping. Touches the EMA, comes back down, and starts creeping back up, and I decide to go long here above that high basically. So I do that, and sadly I usually, when I enter a trade, I always put another entry 10 ticks further, and it reached that, but sadly it didn't fill me, because if it did fill me, it would have come back here. I would have been out here for 10 ticks on my first trade. 0 ticks on my first trade, 10 ticks on my second, so basically the equivalent of one 10-tick trade. But it didn't fill me, and then I let it come down a little bit further. But then, like I say, usually I like to take 10 ticks unless there's a reason to take less, and here there was a reason, that EMA basically in the way. So I decided to take 49 to 42. That's 7 ticks. So, and that was it for me. That was it for me today. I took basically, that's about 20 pips total. So not too bad. Just too bad, because in both instances I would have gotten, all 3 instances I would have gotten the 10 ticks. This actually I didn't mind so much getting out, because it came back all the way up here, and I was really happy that I had gotten out when it came back here. But whatever, These two I should have stayed in for the 10 ticks. There was no reason. That was just me being nervous. But that I'm actually kind of glad. I mean, it was actually not the wrong thing to do to exit here. Anyways, that was it for January 7th, 2015, and I'll move on to the next video. I'm one day behind again here.